What's going on, guys? A hugely bloody day in the stock markets, and I wanted to discuss kind of what's going on and look at Bitcoin since we last talked about it. Remember the levels we talked about? So, talking about where we went, how we've bounced, and how that's looking going forward. So, we'll look at our Delta chart. And also, I wanted to discuss the gap chart. Since we've gapped over the weekend, I wanted to discuss with you guys how I deal with this, how I look at this gap and levels from that. So we'll take a look at that as well. And we can also visit the VWAPs and stuff like that. GBTC, I wanted to discuss too. I know some of you guys are in that. And obviously, premiums are low. So we'll talk about that as well. So anyway, let's dive into this video.
Trade Genius.
Guys, really quick again, running that real low special. We normally don't run the $2.99 for the 12 months. That gets you access to the room with me and Bob and all of our signals, $2.99. And a lot of people have been asking a lot of questions because of the uncertainty here. We're talking about our strategies, and I'm also looking at long-term portfolio deployments on stocks that we'll be getting into here. But we're going to let this market come down a little bit more. So if you guys are curious about getting in here with us, again, this is for 12 months. Real good opportunity to get in at unusually marked down price. All right, let's dive into this video. Okay, so like I said, huge days down on the market. I mean, over 2,000 on the Dow, right? Historic. Never seen a day like that. So everything's bleeding. If you look at Bitcoin, though, on the day, we're currently down 2%. So, obviously it's pulled back a bunch, just like with the market, but we're starting to see things starting to slow down. And that's what I look for when the selling slows down. That's when I look at opportunities to get into a bounce, kind of like what you see here. And on the daily, we've got a nice wick here, and you'll notice what happens here. We had wick, and then we bounced. And so we're seeing that now. Now we ran through into this low volume area, right? So you notice the volume's pretty low through this price area. And so no surprise, we spiked through it. Now, as price moved down, remember we talked about if the 88.50 doesn't hold, we're probably going lower. And so what I was doing is I was actually eyeballing this low volume area here at 7,700. We talked about that in the video last time, and that's where we went long into the room. And I think, what I'd like to do at this point is see how this level plays out. If we get a bounce to 8,900, then I think that's probably a responsible place to take some profits. And then let's just see how things shake out. Because Bitcoin, again, you have to respect the structure of this move. And so what are we doing? We've got a head and shoulders like we talked about last time. We've broken the neckline. And going up on strength, I think you have to protect profits, especially from such a good entry like that. And let Bitcoin show us that it can make a higher low and a higher high. And then we'll start looking at possibly higher moves. Because remember, gold as well as Bitcoin, so these store of value vehicles, they will go down. And I know Bitcoin's a little different animal because of the halving coming, but they will take a hit on the way down, especially when the meat of the selling on the first wave is not over. So the stock markets, I consider this like the first wave of selling, and it's scary because a lot of the metrics that we're seeing now are at what we saw at the bottom of '08 when all the selling was done, and we're just starting to get into this selling, this bear market. So that's very interesting times, especially with something like Bitcoin that has its own market dynamics with things like the halving in play. So my take on it is play the bounces, that's fine, but let Bitcoin show us that it's going to change market structure and start heading higher, and the equilibrium has changed. I do think that we may see a bit of a break from the markets, especially if the markets are finished with the wave one selling, spend a week or so consolidating. That's where you can start seeing a rise in Bitcoin. But I think you do see a decent spurt higher, and that would probably be more likely in April, later this month or in April. So just bear that in mind. On the 4-hour chart, you'll notice here just a big drop, right? And one thing I like to, actually let's look at it on the Delta chart. You'll notice these like spike downs. Whether it's a 15-minute chart or 4-hour chart, I like to see these 3 drive patterns. And so that's kind of what I drew this line back here when I said, let's watch for a 3 drives pattern. And I would actually probably shift this over now because this was just kind of a projected thing that I had done when that move started. So basically that would be like drive one, and you may get some chop like this, where more or less these lows hold, but you get a couple attempts down. All that holds, you get like a triple bottom, and then the technicals rotate, and you get a rotation back up. So like a ABC wave, right? So a series of ABC waves. And I don't really count beyond that, just because beyond 1, 2, 3 or ABC on the wave count, you can get into a lot of revisionists or different sets of counts, and I just don't want to do that. But other than that, though, I think the technicals are looking, it's really getting primed again for another rotate up. Now, one thing I will note here is the delta. Okay, it's been going down. There is signs of life in the delta here on this bottom. Similar to what we saw back here, where it starts to perk up, but we can get some blue in here, then I would be more optimistic on a bounce back up. And again, probably looking at either a test into the 8,500, and if you can get past that into this volume node, I think you could peak out at around 8,900 at the very most, but then expect it to roll over at that point. All right, I want to talk to you guys about this gap. Now, here's the deal. We've got the gap down. I look at it on a 4-hour chart. And so what I do is I just take and first thing I do is I mark where the gap would close at. So that's just the bottom of the 4-hour. And I turn on my magnet and I do this. And actually I'll make that a solid, this will become a solid line. And that's going to give us our marker for the gap close. All right, so I just have a gap chart. This chart is totally dedicated to gaps. So gap chart closed there. And then what I do is I take and I measure via the fibs. So we do a fib retracement tool, and we drag this up to here. And you'll notice it just draws one line, and that's because I set the settings. Actually, I have a template. I call it 50%. And this is all it is. So if you want to copy that, you just extend the lines. You're only marking off the 50% retracement. And that is what I call the half gap. And the half gaps that's actually what all these lines represent. And a lot of times what will happen is you'll see price come up and respect those lines. Now, if you remember, we said watch 9,200 because we had a couple half gap lines there. And this move was starting to look like it was petering out. And sure enough, we fall off from that level big time and come back down. So that's why I keep those levels, because a lot of times you will see price wick off these levels, come up into these levels, and they act as resistance or support, especially when they're doubled up. So I just keep tabs on them. Our next, obviously, level where we have things doubled up is going to be around this 8,000 mark. So getting back above 8K in here is going to be key. And I think once we do that, again, you see this area where there isn't much in the way of half gaps that can give us some room to move on up. So that's how I like to address these gaps when they happen. That's how I maintain these levels. Okay. So if we start breaking back above where we gapped open around here, 82.65 area, then that's where you start paying attention. And half gap would be like the next destination at 8,700 or so. But questions on whether or not this 9,125 can get tagged. I don't know if this can get tagged on this next rotation up. This last rotation here wasn't all that fabulous, right? We got to 8,500, peaked out at 9,200. I mean, decent move, several $100s, but that might be something we see again. So if we do tag this gap, I think that's a huge sell. But I actually think if we can get somewhere close to the half gap on this rotation up, that'd be a victory. But watch for sellers to come in. As far as VWAPs goes, we talked about the yearly VWAP, came right through that. Again, that's another area where I would look for price to resist once it's broken. So that's around 8,500. Quarterly VWAPs, brief pause there, but broke through pretty hard and sliced through this quarterly VWAP level as well. So a lot of volatility, not respecting the VWAPs as I would like them. So I just kind of look at the big stuff, the yearly, right? And so this is really the only level that I'm really paying attention to at the moment when it comes to the VWAPs. So that's going to be the 8,500 yearly VWAP. GBTC dumps down the premium into our green buy zone. So anywhere in here you accumulate GBTC for the long term. 887 heading into halving. I don't think anybody was really expecting that, but we weren't expecting possibly going into a recession, which, by the way, I think we are going into a recession. I think, a lot of the times, well, most of the time, recessions are confirmed in hindsight, and they go, oh, well, we started recession in March or whatever. But I'm telling you right now, with the metrics I'm seeing everywhere, we've started a recession, okay? How the Fed responds to that remains to be seen. And what's scary, again, is because we've just started. We've basically done just about a 20% pullback from the highs, which is a quote unquote bear market, right? If you breach the 20% pullback level, you go from a correction to a bear market. And we've done it inside 2 weeks, basically. So incredible price action. And unfortunately, this looks a lot like '08, except on steroids. And I don't mean to be alarmist, but you need to understand how severe this move is, and it's pretty shocking. But again, I think, we've been talking about how the Fed and their policies have really been making this bed, unfortunately. And, I hope that a lot of people don't get messed up. I know a lot of people in '08, '09 got messed up on 401ks. I just hope this doesn't happen again like that. But you have to be mentally prepared for what we could be into a severe recession, maybe even mild depression, I would dare say. Only because of what we're dealing with. Oil is a huge component of this, and with the Saudis and Russia and the positioning on oil and looking to undercut the markets, that's very perilous for our economy. And if oil gets cheap enough, it even hurts the renewable energy side of things, because people aren't going to want to invest in the tech on that side, because oil is so cheap. You might as well run what you have, right? It's just not worth investing it on the renewable side of things when oil is so cheap. So, I mean, on the upside, yes, we're going to have cheap gas, but on the downside, a lot of jobs, GDP is going to take a hit, and ultimately that's not very good. So, moderation is great for economic growth, and we're just seeing these huge spastic bubbles, and it's really destructive in my opinion. So hopefully this doesn't play out as bad as it looks like it might, and we'll just have to play that by ear. But for Bitcoin and things like that, over the long haul, what ends up happening is once the market bottoms, they tend to bottom first, and they tend to rip very quickly higher and leave most of the market behind. So I think ultimately that happens, but it's far too early to tell how far and deep reaching this bear market is going to go. It potentially could be pretty bad. On the upside, getting these assets like Bitcoin on weakness like this is really a golden opportunity. I do think Bitcoin, after the halving, and we see basically that supply reduction, that's really going to be a bullish effect on it. So I am very bullish for Bitcoin. I think this is a great opportunity for people that didn't get in at these levels to get in at these levels, because I think 12, 24 months out, it's just going to be a no-brainer buy. So from these levels and the returns on them. All right, so that's pretty much it. I guess we could look at the GB, or not the GBTC, but the cycle repeat. Obviously, we're starting to overshoot to the downside quite a bit, actually. Now, this cycle repeat graph is modeled under the last couple of halving cycles that never went through a recession, never went through any kind of global liquidity crisis like we saw in '08, '09, which is where Bitcoin was born out of. So new territory, model doesn't have that in there. And so we can expect deviations. Now, will we see this pump into March, April? That remains to be seen. Even in bear markets, they cycle up. So if we get a cycle up in the global indices, you can definitely see a pretty big pop during this time, just because we're returning to the mean on what typically would be an up move in the cycle, okay? So bear that in mind, but that's pretty much it. Just wanted to give you guys an update on Bitcoin. As far as altcoins, we'll cover that in another video, but it's kind of tricky here because some of them are going up, but many are looking like they're back in the 2018 bear mode. So we'll talk about that in the next video. But again, thanks for watching, guys. Please hit like and subscribe. If you want to check us out, head over to tradelikeagenius.com or tradegenius.co and check out our specials over there. Thanks, guys. I'll talk to you on the next one. Bye-bye.
Trade Genius.